Welcome to TheoTRADE. This is Don Kaufman. It's September 11th, 2024. Just about 30 minutes to go to the cash close here on this Wednesday afternoon. S&Ps absolutely ripping right now, back from session lows. Look, volatility is alive and well, but it's about to get completely and utterly crushed. All right, let's get to that and much more here, of course, on this evening's video. First and foremost, we're taking a look at the SPX right now because, yeah, it doesn't look like a whole hell of a lot, but the S&P's trading down here basically at 54.06. Ultimately, right now, trading at 55.41, but still about 30 minutes left to play in the period. Yeah, what's 140, 150 points amongst friends. Look, the 1 point, okay, and I'm just going to hit this right up front of why I think volatility is going to die down. Quite simply put, you sold off a little bit this morning off the CPI numbers. We exploded back, but we hit the upper edge of the expected move. And at that point, chicken's done. For the most part, you're looking at a 128-point expected move, right? And that is from, okay, ultimately the starting place in the week to where we're presently trading. And ironically, we're literally at that 128-point move right here, right now. Of course, the best way to denote that is going to the intraday chart, and we're on it. So at this point, yeah, you need to expect vol to get crushed back down. Speaking of volatility getting crushed back down, take a look at the VIX today. It's getting crushed down, but look, that doesn't mean that we're not going to have, okay, more price action over here. But in the very near term, look for the vol crush. And you should look for the vol crush because, as I said, like on the week, what's really ahead of us right now? In terms of like, what? ECB announcement, nobody cares at this point. Jobless claims, minimal volatility, unless there's, a little bit of an outlier. And you come in like consumer sentiment. For the most part, what the marketplace is telling you right now, okay, is that the Fed is going to cut a 1/4 point, okay, and the marketplace is happy with it. That's it. Like they're happy with it. Initially, there's a knee-jerk reaction with a huge sell-off. I mean, look, the S&Ps, again, this just can't even be overstated. The S&Ps were down almost 100 points this morning and exploded back up to where we're presently trading. And again, with 30 minutes left to play in the period here, taking a look at the SPX, yeah, we can come up a little bit higher over here, but for the most part, that volatility is going to get crushed back. Also, taking a look at a bit of a broader chart in this, okay, as you saw the marketplace roll over, this bounce back, okay, we're still not to where we were, of course, like, last week. The expected move this week still is considerably below any of the trade, obviously, last week before some of the volatility hit. So if you're looking for kind of a retracement, I'm going to go back over to the S&Ps for just a second. I'm going to take you into 30-day 1 hour, okay? If you're looking for, like a full retracement over here, okay, yeah, you still got to come up quite considerably. Again, we're trading 55, basically 50, and before some of that more extreme volatility hit, okay, the middle of that range was, almost 100 handles higher than we're presently at. So from my point of view, it's unlikely that we're going to retrace into, even the 5,600 seems difficult to achieve, just given the fact that we just exploded back to the upside. Okay. Another aspect to really focus on right now is there's just a lot of defection in the ranks here in terms of advanced decline line. At one point this morning, we had full-blown correlation to the downside. We're back to 50-50. Now, the rally itself inside of the S&Ps, clearly it's not being driven by the financials. And the financials are still effectively down. And the financials, okay, in the last, 2 days of trade got absolutely smashed. But just take a look how wild some of these candles are. When I tell you volatility is alive and well, it's not necessarily done inside of the financials. Okay, moreover, if you take a look at the energy sector, it's getting slammed. Like, to me, that's not a good sign, okay, for overall economic health. So even though I'm saying right now, yeah, we're ripping back to the upside, and yeah, volatility is alive and well, but about to get crushed. That's in the here and now. When you look a little bit further out, okay, this is where you have got to be careful. You look a little bit further out in time, that volatility is still going to come raging back, predominantly because right now your rally, right, belongs to one product. I mean, you're going to talk about Microsoft. I'm sorry, it's only up, 1.5%. You're going to talk about Apple. It's barely moving today. A little 2% out of Amazon. All right, you got me on that one, but you're getting 7% specifically out of Nvidia. So in effect, this rally is brought to you by Nvidia. That's it. So again, even though in the very short duration, we're looking for a vol crush, okay, that volatility is actually going to be with us out in the future, including, of course, next week. And next week, I know there's an FOMC announcement next week, but as I said, okay, the marketplace feels like it's already kind of subsiding to the idea like, look, we're going to get a 1/4 point cut. It is what it is, and we're going to move forward, but we're still hunting for every catalyst out there. That's why I was bringing up the calendar over here, taking a look. Frankly speaking, there's not a lot of other sectors to even be concerned about in today's trade. I mean, you can look around all you want. And kind of ironically, I was looking at like XLP earlier today because this is the consumer staples. They got smashed. Doesn't matter, rallied back up. I was looking over at XLU, which is utilities. Okay, where are they right now? Basically, I mean, you got to even look at like a broader chart. Almost at all-time highs over here is inside of the utilities. Okay, so completely unimpeded. What the focus point is for today, it's Nvidia and nothing but. Like the AI trade just popped back. Maybe this was actually construed as considerably oversold. But interesting and ironically enough, it's not all tech. It's not being felt across the board. Tesla, for most of today's trading session, was actually down considerably. I was pointing out, Apple. Apple's just kind of waffling a little bit right now, but just up like 0.8%. The S&P's reliant once again on one underlying, okay, and that one underlying basically sparked the rally, okay, and bounce of the whole marketplace. Either way, though, it doesn't matter. What matters right now is the vol crush comes when we hit the upper edge of the expected move, because for the most part, the market just basically subsides and says, that's it. Okay. At this point, we don't have to worry too much, about overall volatility. We did what we're supposed to do on a given week. Now, coming into Thursday or Friday's trade, okay, well, we'll be able to get a pretty good feel over here. And I do think that there'll be somewhat, okay, of a pullback inside of trade, just because this is such a blistering move, to be a pullback. Okay, but overall, okay, we're already looking forward into next week's trade. There's going to be some setups here because this bounce in the marketplace, okay, I do believe we're going to be able to fade it. We're just going to have to look for an opportunity coming into Thursday and Friday to fade this bounce. With that, I want to thank everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.